Hello and welcome to Daily Politics on Trust TV. On this program, we discuss issues around politics, policy and governance. I am Shafiu Suleiman. Inflation usually refers to as a broad rise in the prices of goods and services across the economy over time. It's eroding purchasing power for both consumers and businesses. There are basically two types of inflation: cost-push inflation, which results from general increases in the costs of the factors of production, and demand-pull inflation, which results from an excess of aggregate demand relative to aggregate supply. Nigeria has been battling with headline inflation, currently at 34.19%, which is largely pushed by food inflation that has hit 40.87%, according to the latest NBS figures. This figure was at 22.79% for headline inflation as at May, or rather June last year, before the inauguration of the Bola Tinubu administration. Now, the current trend has impacted negatively on food shortages and poverty levels being experienced in the country. While the Central Bank of Nigeria, CBN, continues to deploy macroeconomic policy measures such as increasing the interest rate to flatten the curve, implementation of interventionist measures such as importation of food items for distribution to vulnerable citizens, and ongoing minimum wage negotiations may further push the inflationary regime even higher. It is against this backdrop we'll be engaging with a professor of finance and capital markets, Professor Uche Walake from the Nasarawa State University, Kepi. He is also a former commissioner of finance in Imo State. Thank you for coming.
Thank you so much, Suleiman. My pleasure.
Now, before we commence the conversation, here are some tidbits. Nigeria's inflation narratives took a controversial twist yesterday as the Nigerian Association of Chambers of Commerce, Industry, Mines and Agriculture, NASIMA, gives its own figure, contradicting that of the National Bureau of Statistics, NBS, by a wide margin. The NBS had released its Consumer Price Index, CPI, for June 2024, reporting that headline inflation rate increased by 0.24 percentage points to 34.19% in June from 33.956% in May. But when contacted by some journalists, the president of the Nigeria Association of Chamber of Commerce, Industry, Mines and Agriculture, NASIMA, Calvin Oye, simply said inflation is over 90% without giving further details. Now, giving its own details, NBS also said that food inflation grew to 40.87% in June from 40.66% in May 2024 due to increase in the prices of millet, whole grain, gari, guinea corn, etc., that is bread and cereals class, yam, water yam, cocoa yam, potatoes, yam and other tubers from the tubers class, now among other food items. Also, the federal government said it had dispatched 20 trucks of rice to each state of the federation and the capital, Abuja. The recent move is part of measures to douse the food crisis and the economic burden of Nigerians. The Minister of Information and National Orientation, Mohammed Idris, disclosed this to State House correspondents at the end of the Federal Executive Council meeting presided over by President Bola Tinubu at the Aso Rock Villa. Now, Idris, who appealed to state governors to ensure equitable distribution of the rice to those who need it the most, said each state and the FCT had received 20 trucks containing 1,200 bags of 25 kg of rice. We'll now take a short break, and when we return, our conversation commences. Stay with us. Thank you very much for staying with us. And Professor, once again, welcome to Daily Politics.
Thanks so much, Suleiman.
Right. One issue that has been nagging, if you like, been giving government sleepless nights, is this issue of inflation in the country. And substantially, it has connection, with the economic challenges being faced in the country. As at last year, we saw it was at 22.9%. Now we're talking about 34.19%.
Yes.
So look at the dramatic rise
Yes.
between May last year and today? Well, let me get your perspective. You know, some will say perhaps the policy options taken might have triggered this, but let me get your perspective. Why are we here?
Yeah, first is the statement you made, which I quite agree, is giving everybody sleepless nights, concern, especially the government, and justifiably so. And that's because inflation is more like a monster, okay, in an economy. Inflation erodes the purchasing power of,
the citizens, right?
Of the citizens, okay. You buy something for 10 naira today, you go back to the same market the next day and you're told it's 15 naira, okay. And to make matters worse, you are on a fixed income.
That's right.
Okay, so
which is not increasing.
Increasing. So yes, so purchasing power is eroded, and even from an investment point of view, it's also not helpful. Business it also has a way of even stagnating the economy, because if prices continuously rise, inflation is rising. You're also looking at the returns you're going to get on the investment. If you're going to get a return that will be lower than inflation rate, of course, that means that return is in the negative territory, and you wouldn't want to invest. Okay, so inflation is not
good either way.
It's an ill wind that blows no good, except perhaps for those that owe money. If you are a debtor, for example, you borrowed let's say 100 naira. If you're going to repay the money in 1 year, you also repay, assuming
yes. That is if you're not dealing with banks, because we're coming to that.
So the issue is the fact that as I said earlier on, is something that is worth worrying about. All right. Now you also look at the trajectory. In the last, especially since May. Last year when the fuel subsidy thing was removed.
Yes.
Okay, so there is no doubt that the inflation pressure we're having today, okay, the rate at which we are experiencing is also linked to that sudden removal of fuel subsidy.
That policy
and
option.
The following month, you recall, in June, we also had a sudden unification of exchange rate that also shot up the exchange rate. So if you check the dual impact of that, is still what the economy is reeling from. Even up to today. And if you look at the numbers again, yes, general inflation, headline inflation, average inflation, 34.19%. But the pressure
that is being put
is on food. The
food
pressure
inflation,
point, okay, at over 40%. In some places, Bauchi, for example, Kogi, very high food.
So it varies, according to states.
I also want to agree with those who say that even the numbers we have now, they are conservative. Yes, just today,
manufacturers are saying it's even about 90% or so.
Earlier today, I may not agree with that, 90%, but the fact remains that the figure we have today may not be reflective of what's on ground. Earlier today, I was at the Abuja Chamber of Commerce and Industry. I had the privilege of making a presentation to them at a breakfast meeting. And the reactions, again, by members of the Abuja Chamber, okay, of course, still organized private sector, okay, is in line with what
the president
Nasema, Naiwat Man, and all of them, saying that the current inflation figure by the NBS is unrealistic, is not reflecting. So they think it should be higher.
Is it to douse the tension, or is it to calm the nerves? Because these are government agencies. Figures coming from government agencies.
Yes.
Perhaps are you saying that perhaps they?
No, it's not. I don't think it's to diffuse tension. I think it's more like the methodology they are using. When they say year on year, as NBS says, compared to this time last year, the base. It should have
points, the basis points.
And they have a methodology. They have a basket of commodities, 740 in that basket. Okay, and you also know the truth of the matter is that price of certain items are going up. You also find that within the same period, some items too may be coming down. So it's the average they look at. I give an example. Only yesterday I went to buy. Sometimes I go to the market to have a feel of all these prices are. a basket of tomatoes, sorry, not tomatoes, a basket of Irish potatoes, okay, some 2 weeks ago, if you went to the market to buy a basket of potatoes, you'll be told 15,000, 16,000, basket of Irish potato. Now, this basket of Irish potato used to be 4,000 not too long ago.
That's right.
Okay, but yesterday, I also went to the same market to buy the basket of potatoes, and I was told 8,000.
So it has dropped by at least 7,000.
Yes. So you can notice that seasonal issues, the maybe bumper harvest and so on. So when you take account of these ones that are dropping too, and you marry that with ones rising, so that's how you get an average of what the NBS is reporting. But the point remains, as I said, largely speaking, the numbers are not truly. Some think it should be higher.
Okay, yeah, we'll come to the basket again, because looking at the food inflation largely has to do with the tubers.
Oh yes.
And then the others, the cereals, so to speak.
Yes.
Now, but looking at the timing too, it is harvest time, some will say, because we're beginning to see some of these things coming into the market.
Potato, for example,
coming into the market and all of that. So, but why is it on the rise at this point in time?
Yes. No, food is not just the tubers, okay? They also talk about things like fish, eggs,
oil,
okay?
Cooking oil.
Yes, they're all part of that. Yeah. So the fact remains. I'm sure if you ask a typical farmer today, okay, largely farming is done on subsistence level. But even the ones that farm with a view to, coming to the market, they tell you that one of the challenges they face, a very major challenge, is have to move those farm products from the farm, okay. The
cost of transportation.
Yes, transportation.
Is a key factor.
Yes, and don't forget, the issue of insecurity that is also stopping farmers from going to farms is still there.
Yeah.
Okay. Look at the recent news we're also hearing in Niger State, in Zamfara, in even in places where ordinarily you should expect that farming should go on. In the food-belt regions of the country, there are still issues of insecurity. So that's also affecting
central
production, and that's also why the government is saying, while we deal with insecurity, in the meantime, why don't we have a stopgap measure? Why don't we import? Have this waiver to import food?
We'll come to talk about that, because I know you are an advocate of that. Substantially, you even said it here at some point. But it's also problematic, some would say. We'll look at that. But I wanted us to get this inflation right, especially the effect. Now, we talked about a conglomerate of factors, it's also triggered by policy options taken.
Yes.
The subsidy removal and the unification of the exchange rate.
Yes.
Substantially fuel subsidy removal, because it's connected to the cost of transportation and all of that.
Yes.
While the government is taking these options, is it to say that the government is not aware of the shock waves that will come with it? Looking at and how to contend, because that has been a concern.
Yes.
Why should a government take these two key measures, policy options that could even bring down the economy?
Yes. Suleiman, I must be honest here. If there is any blame to lay, it's not about apportioning blames anyway, but I also think...
We take responsibility.
Yes, responsibility. These are also things that the previous administration ought to have put in place. Remember, this fuel subsidy was not provided for in the 2020-24 budget, all right? Or even the 2023 budget. 2023 was only for 6 months, remember? Yeah. So fuel subsidy actually was taken out by the previous administration, because for 2023 budget, they only did it for January through June. There was no fuel subsidy from July.
Perhaps they want the incoming administration to decide now whether to continue or not.
Yes, but they had not made provision for it. So I'm saying, in terms of compensation measures, in terms of measures to cushion the impact, okay, these are things that should have started way before now, especially with respect to transport. Okay, it was only after the new administration came in that they started talking about getting CNG buses. Okay, of course it takes time to get those things in. So I'm saying that the previous government didn't really put all these measures in place before leaving. And that was why we had that challenge. Now, if you also recall, during the time of the campaign, the leading presidential candidates, they were all talking about fuel subsidy removal.
Right. There was sort of consensus among them.
Yes, there was a consensus. And they were also, all of them were also, unanimous with respect to unification of exchange, because they thought the arbitrage wasn't helping matters. So these two things, were meant to be done. Whoever emerged as, regardless of whoever emerged as winner. But the case of the present administration or present government, okay, was that, it was done very abruptly, okay, and the
doses were much. You dropped one and then dropped the next.
Exactly, they came in quick succession. They came in quick succession. The first of the removal, the unification of exchange rate. So it's the combined impact that we are getting now. It's not as though they didn't know that there will be shockwaves. This short run adverse consequences. But what I'm beginning to conclude is that they didn't know that it will be in this magnitude. All right, so they underestimated the impact it will adverse impact it will have on the people. And if I'm pretty sure, somehow that if they had, if the president, yes, maybe he would have, he wouldn't have done all of that, abruptly. Because I also saw the the blueprint or economic blueprint, or I think my something for out of the
renewed hope.
Yeah, renewed hope.
Yeah.
If you look at that document too, okay, it didn't talk about abrupt removal of fuel subsidy. It didn't talk about unification of exchange rate abruptly. Okay, they talked about it, a transition, a gradual, yes, and that would have been the best, in my view, that would have been the best thing to follow. That document. But now that it has happened,
it would have been done seamlessly, perhaps without people feeling the impact
over a time. And while you are on it, you are also trying to put in place measures to cushion, to cushion
looking at what previous administrations have done. I think at some point during the Jonathan administration, it was removed. And then we saw, the level at which it was, how it was done without Nigerians feeling much of the impact and all of that.
Yes.
That should have been the right way to go, instead of just going full blown.
Well, full blown. And even at that, even as we speak, the IMF is still saying that we are, still subsidizing, that we should remove everything about subsidy. There's this one they call implicit fuel subsidy. Right. They are also saying that the government, I think the estimate they made was 5 trillion naira, on fuel subsidy. The implicit one arising from the exchange rate, issue.
Yeah,
so IMF is saying remove everything. But of course, doing that would be suicidal. So
even though the government continued to insist that there's nothing like a return of it, some people have raised concerns earlier that the government is still paying the subsidy. Why telling Nigerians that it has been removed and all of that?
No, I don't think it's something to debate about. That one is clear, is obvious, that today, if you allow petroleum imports at the the level of exchange rate, you're not fixed exchange rate, there is no how the pump price of fuel will not oscillate. So if the pump price of fuel is must remain at where it is for a long time, despite fluctuations in the exchange rate, obviously there is subsidy. That is the one the IMF is saying also remove. And the government, in its wisdom, which I agree, has not looked in that direction.
Yeah, let's look at the measures being taken. The central bank has been sitting at the MPC and all of that. It's the MPS they call it.
MPR.
The MPR. So they sat and then look at this. And then consistently they've been increasing the interest rate.
Yes.
Perhaps wanting to see how that could, flatten the curve. But it hasn't done that, successfully.
Yeah.
But even though they argued that there are some positive signs, it appears even the multinational institutions are also agreeing with the fact that the economy is not responding. The IMF just a while ago or so dropped the projection from 3.18 thereabout to 2 point something percent. Okay. So it shows that it also aligned with the position that the economy is not responding to these measures that are being taken.
Yes.
why? I mean, what do you think should be done? Nigeria seems to be at a crossroad.
Yes, Suleiman, you're very correct in your observation. The Central Bank MPC Monetary Policy Committee, you recall, in February increased the monetary policy rate by 400 basis points. That was unprecedented. Followed it up again in March by another 200 basis points, 600 basis points, and at their last meeting. Okay.
Again. Yeah.
Yes, again, they jacked it up by another 150 basis points. So between February and now, the monetary policy rate has been increased by 750 basis points. Now 7.5%.
Quite unprecedented.
Okay. Such that today you have MPR at 26.25%. All right. Now, ordinarily, you should expect that should, impact inflation.
Yeah.
Significantly. But that hasn't happened. That hasn't happened because of, the way you started this program. You started by breaking down inflation. You said inflation has two types. Theoretically we say cost push measure it, and then demand pull.
Yeah.
Is that not so?
Right.
Yes. Okay. So you can also say that the demand, if inflation is as a result of a demand pull, you have so much money in the circulation, for example, chasing too few goods. Then if you use your monetary policy traditional tools increase, that's likely to work. But when inflation is coming more as a result of cost push factors, high energy cost, fuel subsidy has gone up,
high transportation
cost,
high food prices,
food price, what do you call it, shortage of food items, for example, insecurity causing that, floods. So when you have all of that, structural issues, it is central bank, will have little or nothing to do with
control
over control.
The factors are beyond the
central bank. We say they're exogenous to the central bank. They're beyond the central bank, and that's why those are things that is fiscal side, should handle. And it's important that central bank understands that, because the other day I had the central bank governor saying that they will continue to use conventional means to tackle inflation. So it's now obvious that these conventional means now have a limitation. It's not as if they're not working. Okay,
the impact is not being felt
exactly
much.
Not significant. It's not significant. They're working because somebody might tell you that there is counterfactual evidence, as they would say, that if they had not increased,
it would have gone
it would have been worse than what it is today. So it's not as if it's not working. Because of what they have done, we have seen some, portfolio investors coming in, buying government securities and helping to shore up the,
But on the other hand, some are also crowding out. A number of businesses have left the shows.
Yes.
As a result of the impact of this interest rate, largely businesses have also closed shop.
Yes, cost of funds, access to credit, and you also made the point. You see, output is also being affected. I told you I was at the chamber. Output is affected. Businesses are also complaining. Interest rates are high. The other day it was Aliko Dangote who said,
it was really
no economy cannot grow at an interest rate of 30%, borrowing at 30%. So today, what do people do? If you have 100 million today, or you have, let us say you have 500 million naira, and before you were thinking of, you had 500 and you were thinking of maybe setting up a small business. Okay, if you knew that treasury bills would fetch you 20-something%, return.
Yeah.
Okay. Why would you use
go
your
for
500?
investment?
Oh yes, you will do treasury bills.
Yeah.
You sleep risk-free.
Risk-free, right.
And the money is there.
You're not going into volatility of the current realities.
Exactly. Because if you push that 500 million to, say you want to set up something, you have to battle with power,
battle transportation, battle cost of and all of that, raw material,
multiple taxes,
exchange rate.
Eventually. So you see, the business environment is choking. But I always say that I see some ray of
hope.
Yes, hope. I see some silver lining in the work of the Taiwo Oyedele committee. That committee has done a very good work, and they've produced their report. The recommendations in that report, if they are implemented, it will go a long way to improve the business climate in Nigeria. And once business climate begins to improve, once we begin to see businesses come up, jobs will be created. Okay, the government will even make more revenues because the businesses will start making profit, and inflation rate will come down.
Yeah, but is the government looking at that direction? Because what is happening now, what some are saying is that you actually raised it also. You talked about the fact that there is need to look at the fiscal side.
Oh, yes.
Since the monetary aspect has, not been fully given the result.
Yeah, there's need, maybe I should put it this way.
Right.
There is need for complementary fiscal measures.
Right.
From the government side. The central bank is doing its bit, okay, but I want to advise, the MPC will be meeting anytime.
Yeah, that's the reason why we are talking.
I want to advise
because Nigerians are also expecting waiting to see what will happen. Yes. Would they continue to jack up the interest rate?
You see, now that especially now, you see my worry now. You see, between January and May, the inflation figure we had is that of June, right?
Right.
And between January and May, month-on-month inflation was actually coming down. It came down. It came down from 2.29% to 2.14.
At some point, it was even celebrated by the government.
Yes, now month-on-month. When month-on-month inflation keeps coming down, if it's is an indication that headline inflation may start coming down. But what did we see last month?
Okay,
it went up.
That's where I'm heading actually. Now, looking at production side, output. Now, especially agriculture. Many believe that the executive branch has not been doing enough to encourage productivity. Now, billions of naira that will be used to purchase this grain, if you like, from outside. Yes. You advocated for it actually, yes. But then the concern is that rather than take this monies out of the country, yes. The government ought to have invested in the local agricultural production now, yes. Providing access to farmers, yes. Given creating an enabling environment that yes. is security, yes. Helping with the technology, yes. Helping with fertilizers and so on and so yes. forth. The cost of fertilizer, yes. at over 40,000 naira. How would this encourage productivity?
Yes, again, Suleiman, you have a very good point there. But even before I address that, let me quickly finish my recommendation. And I was going to say, Central Bank MPC will soon meet. Yes. My advice, yes, month-on-month has, reversed, and headline inflation is still up, but they should not be, because
fixated
because of that. Yes, they should not. Because of this, they shouldn't be scared. Continue to jack up interest rate, because the more you jack up interest rates, the more you also fuel the cost push inflation.
That's right.
All right. So I would suggest a pause.
Okay.
I'm not saying they should
relax.
Go back to reduce. No, but at least pause it. Let's watch how the effect of the ones we have done, how it permeates through the economy. Now back to the one.
Encouraging productivity.
Now you see, it's very easy to say. Government should, encourage productivity, put money here, put money there. The point is, the reality today is that there is hunger in the land. Yeah. The reality today is that a lot of people are having difficulty even feeding. Yeah. That's the reality. Yeah. Okay, and you cannot say you won't fold your arms and watch all these things happen. As we speak, I'm sure you must have heard of rumors of protests, that will be here and there. Why is that so? People are
agitated.
Agitated. So, what stopgap measure do you put in place, okay, to address that in the immediate, while you now buy time to do these other things you're mentioning? That's why I suggested at that time, which I'm happy that. The government eventually, that government should find a way. At the time I made that suggestion, rice millers were saying that they can't have access to paddy. The paddy. So I'm saying, for now, let's see how we can have food. But the people have said yes. If you bring them, people will smuggle them out. But bring food. If you bring food, and people will have something to eat.
For how long would that take them? Let's say for
if it takes 6 months, for example, to plant and grow something, the window we have is a 150-day window to import food. That's sufficient time to ramp up whatever food that you want to do, whatever thing you want to do.
Yeah, but the concern is this. Take for instance, the government has just dispatched 20 trucks of rice to each of the 36 states of the Federation, including the FCT. These trucks contain
the 1,000.
Contain.
I think I saw 1,000.
Yeah, it contains
25 kg or so.
25 kg, yes. 120 bags, 1,200 bags of 25 kg, for instance. Now, if you look at this, and you're taking this to a state that has a population, let's say, of 6 million.
No, that's like a drop in. That's a drop. Again, these things are about strategy. You also remember when I was on this program sometime, and I said, I don't approve of this idea of going to share things.
Palliatives.
I don't approve of this idea of going to share money, share 25,000. How many people will get that? Okay, especially in an environment where you want to share it through the governors,
the political
actors.
Yes.
Okay,
there has been a serious concern looking at what has happened before.
Exactly.
Now, take for instance the measures. I mean, the palliatives given the onset of this crisis. Palliatives were given to governors at state level.
Yes.
But the concern is that virtually it didn't reach out to.
It can't. Of course, it can't. It can't. Even if you're going to do this, if you're a governor, for example, and you belong to a political party and you get that, you want to first of all, that's the tendency. So in order
you may not get to the right people.
Oh, you may not get to the right people. So there must be a way to see how, and that's also why I applaud this recent Supreme Court judgment about sending funds directly to
local
governments. So if there is a way to cut off the
the funds, the allocations.
No, cut off the middle people. By this I mean the governors now.
Now reach out to the states, the local governments directly.
Directly to the local governments.
Right.
And it's not about even giving them through the local government chairman or the caretaker people. No. Okay. Every local government has groups. Okay. There must be a way to reach out, either civil society groups or religious bodies or whatever. These are people that you can guarantee that when they get, if you have these trucks now, you take them to maybe to the traditional rulers in those areas. Traditional rulers will be in a better position, okay?
To know those that are the most vulnerable. What about the figures? This also talk about the fact that we're not planning, so to speak, as a country. By now we should know, and we should be able to have access to these vulnerable people we are talking about.
Absolutely.
The register has been there, and there's a lot of controversy around it.
Yes, and that's the more reason. I had also said it. Okay, the more reason that the conditional cash transfers, thing, in my view,
did not.
Cannot be effective because at the end of the day, it creates room for corruption. It creates room for abuse. So government, my approach to this issue of food security is to find a way of making those food items cheaper than what they are currently being sold. So that people can go and buy them as opposed to going to say you're distributing. Because I also understand these things are also bought from the markets. When you buy them from the market, you also
locally. Are they being sourced locally? Because the ones
if they are taken from our reserves, from the.
But there was also another concern that the reserves are empty.
So if they are empty, that means they are buying them from local markets. And if you are buying from local markets, it will also have the effect of shooting up the prices. Okay, so these are things the government should weigh. When I had government, going to distribute rice, I thought maybe from the reserves they're going to open up our silos and then bring out these grains to distribute. But if they're not there and are procuring them from local markets, of course the impact too will be to raise prices.
So and here we are trying to tackle inflation. But we're also exacerbating prices.
Absolutely. So it's really a dicey situation.
Right. Okay. There's some sort of hope. There is this projection. I don't know whether it will have any value to add. On the current crisis now, the NNPCL is saying that Nigeria would be net exporter of oil by December.
I read it,
and the projection is that they will be able to hit 2 million barrels a day. and that will solve perhaps or substantially, bring down the issue, the crisis around the cost of fuel and what have you.
Yes, absolutely. If that what materializes, of course, that will go a long way. That will go a long way. I read it. I saw the NNPC saying Nigeria will become a net exporter of petroleum products by December. I said, please, everybody should go and mark that deadline. But we have been having deadlines.
That's
I also read that Port Harcourt Refinery, the first August. You read it?
Severally, several timelines that have not been
exactly.
Been
so
implemented.
If Dangote Refinery too is up and running,
next month,
we also had, and then Port Harcourt Refinery.
He's talking about Kaduna Warri, who also join in the next 2 months or so.
Wow! So you can imagine. So that will go a long way to reduce our, forex crisis, the pressure. Exchange rate is likely to come down. Okay, if that happens, and if that happens,
it's good that you said if that happens.
Oh yes.
Some say that policymakers are very good at dowsing and.
No, they have said it. Of course, I'm sure even the president, who is the minister for petroleum, has also noted that. So if that doesn't happen, then the person occupying that office should go.
A number of people would have gone. I mean, the Port Harcourt Refinery. Yes. How many timelines? I think this is about the 4th or the 5th timelines that have been given concerning the resumption of operation of this refinery.
Yes. So if it doesn't work out, it doesn't happen. Okay, I would expect the president at that time to now say, okay, let's try another hand. The president will change whoever is the people in charge.
Yeah, because one of the concerns raised by a number of persons, including the resource person that was here yesterday, was about the trust deficit between Nigerians and the government. Nigerians are watching to see each time policy pronouncements are made. Nigerians want to see it.
It's been better for them to tell us it will start working soon.
Instead of putting
instead of saying it will start. Of course, you raise people's hopes, and then when you get to that end, you start making one excuse or the other. Okay, so there is no reason that by now we shouldn't be talking about having new refineries. I understand it doesn't take more than 2 years to build a refinery. But again, it is not something government should be involved in.
It shouldn't be government driven.
Yes, government driven. We should completely hand over these refineries to the
private sector.
To the private sector. Yeah. All right. So to complement what Dangote is doing.
Right. Okay. Looking at the impact already, and of course what is being done. We talked about how it is affecting the ordinary people, exacerbating poverty, hunger, and then even, fueling these agitations around protests and all of that. Businesses are also concerned. Exactly. The manufacturers are talking. A number of them have closed shops. We've seen the figures last year was about, a couple of months ago, I think there were figures around 400 thereabout. Companies have shut down as a result of lack of, unfavorable, environment, business environment. So government has a mix on its table now, dealing with, addressing the inflation as it affects the people, addressing inflation as it affects businesses, and then managing also the situation.
Exactly.
And at this point, there has been concerns around negotiations, especially minimum wage. Then the organized labor insisted, talking about 250 thereabout, and then the government is talking 62, and then they are yet to reach a compromise. I'm sure government is worried that, okay, if we push this, it will trigger the current one. So how can they manage the situation?
You say there's this argument that says if you look at factors of production, land, labor, all right, capital, and of course entrepreneur. If you take land, the price for land has gone up as rent. If you take capital, the price for capital interest has also gone up. But labor has remained
stagnant.
Down. Yes. So that there is need to also raise the price of labor so that you can have that
equilibrium.
Yes, you can have that if you like equilibrium status. Now, otherwise, you have a situation in which what we're even experiencing now, even companies part of why companies are leaving is also because some of them say that they are accumulating inventory. Okay, they are not selling because they're accumulating inventory. And if you accumulate inventory, what happens? Capacity utilization is low, and what happens? It affects your bottom line. You can't make profit. Before you know it, you start laying off business. Yes, out of business. All right. So there is also need to reflect demand, to stimulate demand. So the increase in the minimum wage, in my view, may not necessarily translate to higher rate of inflation. You know, I just analyzed it to you that the problem we are even having is not because of demand. It's not as if it is the demand pull.
It's about
more of the cost push. All right. And if you also come to think of it, when central bank talks about money supply, too much money. Yes, you see, what is money supply? You know, they define it, the broad money supply, they say currency in circulation plus demand deposits plus savings plus time. Okay, that's their broad money supply definition. Now, if you look at the savings deposit and current account, these are the money you have in the banks, right? Now, NDIC will tell you, going by this recent...
the recapitalization?
Yeah, the deposit
insurance,
they did. You know, they jacked it up to 5 million. Okay, and they said that that's 5 million covered 99% of the depositors. When it was 500,000, the maximum deposit insurance, they said it covered 89-90% of depositors, meaning that only 90% of depositors are those that had 500,000 naira below. So 10%, the rest, yes, the major money, you know, is in the hands of, you know, a few. So again, that tells you that it's not about the money supply they talk about is, you know, what you have there in the hands of a few. So if you increase minimum wage now, that, you know, appears to trickle down, okay, it may not significantly affect the inflation. Rather, it will even be positive for the economy because you stimulate demand, you reflect demand, okay, and businesses, you know, can now have a...
Yeah, but wouldn't it also be impacted by the inflation? Because, you know, no matter how much you are giving the workers, when it comes to, I mean, facing the realities now, you discover that it is not anything to write home about. Even if, for instance, the government is paying 100 or 150 as minimum wage, yet it cannot take them home.
Yes. You see, look at the situation I painted. Okay, I'm sure in many places now, rent has gone up. In many places now, school fees, you know,
have also increased.
Yes, have also increased. All these things have increased, and yet the salaries are, you know, let's just even use minimum wage. Okay, 30,000 naira minimum wage. Okay, the person earning 30,000 today is far worse off than, you know, 2-3 years ago. So if that is increased to say maybe 100,000, okay, the person will be in a better position to survive today than the 30,000 naira the person is taking.
Right.
Okay, and it's also affecting savings, even at the level of at the retail level. With 30,000 naira, for example, in 2 years, if 2 years ago you were saving like 5,000 naira with your 30,000, today you end up borrowing. You perpetually borrow.
Yes,
debtor. So if they move your something to 100,000, for example, remember too, when you increase salary, you increase minimum wage, the consumption level is not going to increase by the same proportion. For example, if you increase minimum wage now from 30,000 to 100,000, it doesn't mean that consumption, the person will consume the entire 100,000, the 100,000. It's possible too that if he had the habit of saving 5,000, he will begin to now save 5,000. So that will be, you know, positive for the economy. We have to realize that this economy is not just facing inflation. The challenge is not just inflation. The challenge is what? Stagflation.
Okay, what does that mean?
Stagflation is a situation in which the economy is stagnated. It's stagnating. It's not growing.
It's not moving.
Yes, it's growing at a very low.
It's even declining because going by the projection by
IMF, apart from that, you look at last quarter of last year, economy grew by 3.15%. First quarter of this year, economy grew by 2.99%. So it dropped.
Yeah.
Okay.
And so even the what do you call it? Even the reserve is also being affected.
The what?
Yeah, the foreign reserve.
Okay, external reserves. Yeah. Okay, well, external reserves, that's another, matter altogether. Recently, external reserves noticed some accretion. They have just told us that's crossed, if you check the website, that's crossed $35 billion. But again, the increase we are seeing in external reserve is not as a result of exports we are doing. Okay, it's not flowing from productive activity. It's flowing more from loans.
Yeah, and maybe the remittances.
No, we are taking loans. We take loans, and then of course you put in your reserves, and then the foreign portfolio investments that have come in, those who are coming to buy our treasury bills for 90 days, 180 days. After that, they will still leave.
They're cashing out.
They will still cash out. Okay. Yeah. So the point I'm making is that I think it's time and I'm sure government also recognizes that that minimum wage has to be reasonably increased, and it's not going to have any significant negative effect on inflation.
Yeah.
And that was talking about stagflation. I said stagflation, economy is slowing, inflation is also rising. So these are two, so we have to balance.
Okay. So beyond all of this, perhaps the environment also has to be improved, because whatever you do, if the cost of, even with the CNG initiative and all of that, if you fail to address the cost of transportation, you fail to address the cost of energy, you fail to address this issue of insecurity, the other factors we're talking about significantly are contributing to this inflation,
you have,
especially insecurity, for
instance. You've identified the factors very, very correctly. These are the major drivers of inflation in Nigeria today. We say supply side factors. You have mentioned them. Energy issues, transport, electricity. Okay, many businesses today cannot, they run on generators. And the generator you're running on, you have to put diesel or you put fuel, and the cost of fuel is also, going up. So energy is an issue. And then the issue of transport again. All right. Now, government should also begin to pay attention to rural roads. Okay. In the past, remember those days we had DFRI, Directorate of
Rural
roads to ensure that farmers are able to bring food from farm to the the urban areas where they want to sell. So rural roads are important as much as these are.
Now that allocations roads are channeled directly to local government, perhaps it's about time.
Oh yes, that's why I said
government should demand accountability in that respect.
Yes, taking funds directly to them. Apart from taking funds directly to them, I had said here too in one of your programs that there's also need for a special intervention that goes straight to the grassroots. Okay, nothing says in a year, for example, we can't have a special intervention of 774 billion. That's not too much for us. It's not up to 1 trillion.
To go to the local government.
Each local government 1 billion naira for a particular. For projects. That's where you see that local governments' activities will begin to.
For instance, you're talking about agriculture now.
Yes, agriculture.
Providing access. To financing, especially to smallholder farmers.
No, that one is another package altogether. Ensure that they have access to finance. But this 1 billion will simply go to project either roads, something that will also enable the economy of those rural areas. And by the time you do that, you also see a reduction in rural-urban migration. People will even leave urban areas to come to rural areas because they know money is being sent to those areas. And as you have economic activities, as things are being produced, inflation
will also have to come down.
Yes, will naturally come down.
Thank you very much, Professor, for your informed perspectives. Professor Uche Uwaleke is a professor of finance and capital market, a former commissioner of finance in Imo State. Thank you very much for coming on the show.
Thank you, Suleiman. Thank you.
And we do hope the authorities concerned and the policymakers are also taking a cue from some of those observations, the need to look at other sides of the divide, beyond just the monetary interventions. Thank you very much once again for coming. And viewers, that's a wrap on today's package. We sincerely hope you found the conversation engaging and informative. And be sure to join Daily Politics Live, airing every weekday, and also our special package on Friday, during which we open our telephone line for you to comment on national issues. Once again, I'm Shafiu Suleiman. Thanks for being there.